Hi guys, welcome to this Money Control live stream. You're watching Morning Trade with me, Nandita Khemka. Brand new week and a long one at that, given the fact that we have a special trading session on Saturday as the NSE, plans to shift to disaster recovery site. And, we will have a special trading session of, 1 or 2 hours on Saturday as well. But, global cues looking positive. GIFT Nifty hinting at a mildly higher start for our markets. Lots of stocks in focus, including the likes of Reliance Industries. L&T, of course, as it has bagged a buy rating from CLSA, and lots of other stocks to watch out for. We'll also be taking up all your stock-related queries with our technical expert on the show. So if you have any queries, keep them coming in on our live feed on YouTube. We'll try and take them up. But before we move any further, let's take a look at the top stories at this hour. Nvidia powers weekly gains on Wall Street. Both the Dow and S&P 500 hit fresh record highs on Friday. The US Treasury yields dip while the dollar registers the first weekly fall of the year. All eyes will now be on the personal consumption expenditure data that is due this week. Asian markets open mixed in early trade. The Nikkei is extending its rally beyond that 39,000 mark to hit a new high. The GIFT Nifty also, as I mentioned, is indicating a flat to positive start for the Indian market as well. Oil posts a weekly decline as hopes of early rate cut by the Federal Reserve fade. Brent trades at around that $81 a barrel mark. And after 11 years, the centre reveals the All India Household Consumption Expenditure Survey shows that the gap between rural and urban expenditure is narrowing, while household consumption rises sharply in the last decade. And the Finance Ministry will meet the fintech players in Delhi today to reiterate regulatory procedures that need compliance. Sources say that Paytm will not be a part of the 25-30 companies that will participate in the meeting. Well, let me first bring on board our technical expert for today. Joining me is Rajesh Palviya, who's a Senior VP Research Head Technical and Derivatives at Axis Securities. Great to have you on the show, Rajesh. We've been making consistently new highs on the index, right? Like last week as well. We came very close to that 22,300 mark, but missed it by a whisker. This week, of course, we'll have the monthly FNO expiry. And, it will be the first positive February FNO series in, I think, somewhere around 3 years or so. Do you expect the Nifty to clock new highs and end the Feb series above that 22,300 mark?
Good morning, Nandita. So looks like, yes, we are going to have a positive expiry for this Fab series, and looking at the overall market breadth and the participation of most of the large cap space, that clearly shows. And towards the end of this series, we are now comfortably holding about 22,100, 22,200 mark on the Nifty. So that clearly shows that, if we continues to hold about 22,100 level, then possible, yes, we can hit further new all-time high also, and we can see a continuation of this rally towards 22,300 to 400 also in next couple of trading session. So overall sentiment is on the bullish side. Only buy on dip should be your strategy. Looking at the overall structure, we believe that, looking at the put concentration, that clearly shows that, there is a confidence at 22,100, 22,000. That's the major support area based on the put concentration for this series. So yes, possible we can see furthermore higher side level in the Fab series itself. We are projecting target towards 22,400 for Nifty in next couple of trading session. Keep your stop loss at 22,100. For Bank Nifty, again, 47,200, that is acting as a major supply zone at this moment, as most of the call writers are taking their position around those level. So 47,200 is the challenging level for Bank Nifty. If at all Bank Nifty crosses those level, then we can see short covering action, and then possible upside target we can see towards 47,600 to 800 also if we crosses those level. On the downside, 46,500 is important support area. Even in the previous week also, we have seen that, that put based concentration is protected by the market participant, and 46,500 actors as a good support. So I think that level needs to watch in coming trading session. If we hold those levels, then again, yes, Bank Nifty may attempt to give breakout above 47,200. So buy on dip strategy again in the Bank Nifty also. Keep your stop loss around 46,500, and any volatility should be used as a buying opportunity in Bank Nifty also.
All right, buy on dips is a strategy when it comes to both Nifty and Nifty Bank. Hold that thought, Rajesh. We'll come back and talk about specific stocks as well. But let me also bring on board a big market voice. Joining me is Sandeep Bagla, who's the CEO at Trust Mutual Fund. Great to have you on the show, Sandeep. I just want to understand, we've been hitting fresh highs in the market, right? The Nifty has been hitting fresh highs. It's been quite a stellar up move. But here on, what is the key risk that, one should take note of, given the fact that, chances of an early Fed rate cut have diminished? You have China also taking steps to boost its economy. And, we've seen in the past that, any rebound in China markets have been quite, fast. So here on, do you think these are the two risks that one should keep in mind? Or do you think valuations could be the bigger risk going forward?
Good morning. Thank you for having me on the show. No, what you are pointing out is right. There are multiple risks on the horizon. There is a problem in the Red Sea. There is cost issues. There are talks of central banks cutting, but I don't know whether central banks have ever cut in the past when markets have been hitting at an all-time high. Because obviously equity markets are not building in any kind of recessionary or slowdown. So what we can expect from central banks is basically an adjustment where the interest rates come down a bit. So it will not be a cutting of a rate. It will not be the start of a rate cutting cycle. So one should not really expect too much from the central banks. I think valuations are the key risk. Today, the market is in extreme bullish mode where we are hitting new highs and the valuations have gone up. So the margin of error, the margin is very low. Market is obviously expecting already building in high growth rates. And if there is any disappointment on that, that could be a disappointment for the markets in the slightly short to medium term. But in the immediate short term, the momentum is strong. The global central banks have been printing money. I think the G4 central banks have the stock of money today is about $21 trillion, which is going to areas wherever the valuation seems to be cheap or growth seems to be high, and those asset classes are doing well. And because the India relative growth story is very good and there is some kind of stability in the economy and the politics, we are getting good flows internally and markets are going up. So it's more of a momentum-driven stock story, I would say, rather than an investment case one could make of at this point of time.
All right, a momentum-driven rally, and of course, the up, in the short term, the bias is towards the upside. But let's talk about specific sectors. Then we've seen a very strong rally play out on Wall Street. Fueled by Nvidia, right? AI has been the buzzword. In the last couple of years. But do you think Indian IT is poised to benefit from this AI wave?
Of course, Indian IT will benefit. Indian IT has benefited from all the major tech innovations that have happened in the past 25 years, starting from the Y2K situation, the global majors. So Indian IT has been quite smart and we have executed things quite well. It remains to be seen whether we can transform ourselves to, delivering products of quality which the Western world can deliver. You see, today we are sitting in India and all the Indians are paying money to all the American companies without realizing it. We are paying money to Apple, Amazon, Google, Microsoft, Uber, and the like. So they have, delivered products which can take money from the Indian consumer. I don't think in India, IT companies have that kind of wherewithal that we can come out with a product that can take money out of the American wallets. So I think there's a long way to go. And I'm sure the Indian IT companies will do well in the long run. But there is some distance to cover till we reach that. But the broad point is, yes, if there are benefits that are accruing to the IT world, they will percolate down to the Indian IT companies as well.
All right, that's the view on the IT pack. But what about FMCG? Earnings have been nothing to write home about, and FIIs have been trimming stake in this pocket. Should one avoid this pocket completely, given the fact that rural demand is still patchy and a lot is riding on rural recovery, especially in terms of volume growth for these FMCG firms?
Well, the Indian consumer has been a tale of two cities. The cities are doing well. The rural economy is not picking up to that extent that the economy will do what it will do. It is the markets which have to sort of balance it out. The markets are more bullish than the economy in the hope that the recovery will happen in the future. So, yeah, probably one could be underweight in sectors where the recovery is yet to come, and there are no signs of immediate recovery on the cards. Yes, so one could remain slightly underweight on FMCG.
Of course, underweight on FMCG. That seems to be the general consensus in the market as well. But I cannot not talk about the PSU stocks, right? We've seen a very, stellar run when it comes to the entire PSU universe. But, here on, do you think there are certain pockets where, there's still a lot of room for upside? Because, a lot of experts have been pointing out that there's a lot of froth building, in some of the PSU stocks. Would you say oil marketing companies are still worth a look, in terms of valuations? And what are your thoughts on the railways and defense pockets?
See, the market outlook is extremely bullish in terms of order inflows and the optimism around the order flows for PSU companies. The PSU companies have got re-rated. There were concerns on government intervention from the promoters and capital allocation and in terms of agility. I think those perceptions are getting cleared for making room for greater valuations and improved, valuation multiples. So that story can go on for some more time till we get proper evidence on the ground whether the re-rating has been worthwhile, has been backed by actual numbers. But there are improvements on the ground. And see, some of these sectors that you mentioned, railways and defense, these are long-term sectors. So one has to take a slightly longer to medium-term call. Today, since you have more money coming in short period of time into the Indian markets, the valuations are going up. And the only thing I can say is that if you're betting on these sectors, you should be prepared for the long haul. So one should not really think of it as a 100-meter sprint. One should think of it as a marathon. And PSUs, I think, will do well in the long run. For the short to medium run, it's anybody's call.
All right. And lastly, what are the themes that are looking interesting to you? Especially, given the fact that it is an election year, which are the themes that you would be betting on at the current juncture?
At the current juncture, we have not really started our equity funds as yet. We are likely to come out in April with our first flexi cap fund. And I think our at Trust Mutual Fund, our CIO, Mr. Mihir Vora, he has told me that you should better look out for my first portfolio to see where I am bullish. So I think we'll have to wait for some more time.
All right. I think I'll also touch base with Mr. Mihir Vora later in the week then. With that, thanks a lot for taking out time, Sandeep, and sharing your thoughts with us. Appreciate your joining in this morning.
Thank you so much.
Well, that was a big market voice, but let's get back to Rajesh then. Rajesh, you spoke about the Nifty Bank Index, and we cannot not discuss HDFC Bank, given the fact that it has got the RBI approval to sell somewhere around 90% stake in HDFC Credila as well, right? Of course, the stock did make an attempt at a recovery last week, in the middle of the last week, but that didn't really sustain. So here on, would you say that, much of the selling is out of the way, at least chartically? How are things looking? We also have a query coming in from one of our viewers, and, he wants to know whether one can accumulate HDFC Bank for the long term. Would you advise him to do that now?
See, Nandita, overall structure is on the weaker side. But if you wish to buy this stock for longer term perspective, yes, you can buy and accumulate this stock. It's a good quality stock. Yes, though some challenges are there in the higher side. Again, this stock is, getting the supply pressure on major, supply zone of 1440, 1450. That's the major challenging level at this moment for HDFC Bank. But yes, if you wish to buy for longer term perspective, you can buy and accumulate the stock in this corrective move. On the downside, the major support area at this moment is placed at around 1370, 1360 zone. that level needs to watch in near term to short term basis. If at all stock able to protect these level, then yes, possibly we can see in coming weeks or in coming month stock will attempt to form some bottom at these levels, and then possibly we can see relief on the higher side. But for some time we are expecting some consolidation is likely to be there in range of 1370 to 1450. This could be the possible range. So you can buy and accumulate the stock in this volatile market in this decline. On the breakout above 1440, 1450, yes, possible upside target we can see towards 1540 to 1550 kind of level in short to medium term perspective. So yes, our advice would be to add and accumulate this stock in decline.
All right, buy on decline should be the strategy on HDFC Bank. Just want to point out that Goldman Sachs had come out with a report on banks last week, and they had retained their buy rating on the stock with a target price of somewhere around 1900 rupees or thereabouts, implying a 33% upside on the stock over the next 12 months. But with that, let's also talk about the stock of the day, Reliance Industries. Of course, reports suggest that Disney and Reliance are said to have signed the binding, pact for the India merger, Indian operation merger, right? And an announcement is likely as soon as this week. Reliance Industries, Rajesh, we hit a fresh high, 2,995. That was the fresh 52-week high that the stock made last week. But do you see levels of 3,000 this week?
Yeah, definitely. So stock is enjoying almost its all-time high trajectory, and looking at the overall structure towards the end of this Fab series, stock is trading near to its series high. The call concentration area is placed at around 3,000 marks. So I think once stock crosses above 3,000, I think we can see a rally towards 3,100 also in a positional basis. So those who have already bought the stock and those who are holding the stock, they can hold position. Now trailing stop loss for trader should be at around 29.60. If it's hold these level, then yes, possible target towards the end of this Fab series we can see towards 3,040 to 3,060. So yes, we are bullish for Reliance, and one can hold their position. Even in the decline also, one can buy and accumulate this stock, as overall structure is looking very promising, and we believe that going forward we can see further more higher level, and possibly we can see targets toward 3,200 also on a positional basis.
All right, that's the view on Reliance Industries. In fact, we also had a query from Rajesh Veera on this particular stock. He's been holding 50 shares at an average price of 2,420. The call from Rajesh here is to hold on for more upside. I hope that answers your query. But, before I take up more queries, I want to get your thoughts on Asian Paints. We've had a report coming in from CLSA wherein they have downgraded the stock to sell. Target price has been cut to 2,425 from 3,215. Of course, rising competition seems to be one reason why CLSA has downgraded the stock. And, we of course have Grasim as well, that has launched its own, paints brand, Birla Opus. Here, Citi has a buy call. Target price at 2,650. On the charts, if you look at a Grasim and Asian Paints, what are you spotting? Do you think one should now prefer Grasim over Asian Paints?
There is a clear divergence between Asian Paint and Grasim. Asian Paint is in corrective move and Grasim is in upward momentum. Looking at the structure for Asian Paint, the stock is now consolidating near to its 50-day moving average, though we have seen a significant corrective action in last couple of month in the stock, and now stock slipped below to its 200-day moving average also. So that is giving a sign of weakness in the stock. Though stock made some attempt of recovery, but still stock is struggling to cross its immediate resistance area of 3,040, 3,060. That's the challenging level at this moment for Asian Paint. Until the stock not crosses above 3,060 level, it may remain under consolidation for some more time. On the downside, the critical support area is placed at around 2,900. If at all stock breaks below those level, then I think furthermore, corrective move we can see towards 2,800 also. So 2,900 should be the stop loss, those who are holding the position in the Asian Paint. Below that, we can see furthermore liquidation in the counter. Though long-term structure for Asian Paint still on the bullish side, but short to medium-term structure is turning on the bearish side. If you look at the Grasim structure stock, if you analyze the overall structure, stock is almost trading near to its all-time high trajectory. Looking at the overall structure now, stock is approaching to its multiple supply zone that is at around 2200, 2220. If at all stock crosses about 2220, yes, possible upside we can see towards 2150 to 2200 also in coming weeks. So Grasim one can hold even at the current level also on a breakout about 2200. One can add more position for short term upside towards 2100. Keep your stop loss at this moment towards 2160.
All right, 2160, an important level to watch out for on Grasim. But let's take up some of the viewer queries. A lot of them trickling in this morning. Naveen wants to know your thoughts on M&M. Of course, the stock has been on a steady uptrend. If you look at the 1 month chart, 6 month chart, even over the last 5 sessions, it has, rallied a good 5.5%. Here on, of course, stock is near about its 52-week highs. Thoughts on how the, future looks like for this particular counter?
So very strong momentum is taking place in M&M. A brief consolidation of 2 month stock again, broke out the consolidation range of 2 month, and looking at the breakout towards the end of this Fab series, we expect that this momentum can extend further, and possible target we can see towards 2000 to 2040 on Mahindra and Mahindra. So those who are already bought this stock, they can hold. Even the fresh buyer can also take some position for trading perspective also with stop loss of 1890. So overall structure is bullish, long built up is there in the M&M, and we believe that outperformance is likely to be there for this stock in the automobile space. So view is to buy at current level also, and those who are already holding can hold for upside target of 2000 to 2050.
All right, that's the view on M&M. I hope that answers your query. The next query is coming in on an NHPC from Sayali. Of course, we know that the counter, is cooling off after the stellar up move. The last 5 sessions or so, it has lost somewhere around 4% or thereabouts. Now it's trading below that 100 rupee level. For somebody who's invested in the stock, should they keep holding on or should they look to average? What would you advise them?
So very strong run up we have already registered for this stock in this calendar year itself, and now some cooling off effect is taking place since last 3 weeks. Some profit taking is happening in the stock. But if you analyze the overall structure, stock is in the bullish trajectory for a short to medium term as well as for the long term perspective also. Though we have seen some of the supply pressure in most of the PSU stock from recent highs, so same kind of behavior or same kind of activities happening in the NHPC also. Stock is almost trading near to its 20-day moving average, that is at around 92, 93 level. If its stock again able to regain this trajectory and close above a 93 level on a weekly basis, then possible again we can see some buying activity is likely to come back in the stock, and possible again stock will try to regain its all-time high trajectory also in the short to medium term basis. So those who are holding this stock can hold it. We believe that till stock is holding above 80 level, one can hold their position. 80 should be your stop loss. On the crossover above 105, possible target on the higher side we can see towards 125 to 130 also on a positional basis.
All right, those are the levels to watch out for on the upside. Hope that answers your query. But very quickly, you want to just squeeze in a couple of more queries. Vijay wants to know your thoughts on a Sula. Of course, the stock has been in low spirits. If you look at the last 1 month chart, you'll see that 15% kind of value being shaved off. But would you advise traders to play in this counter? Do you think buy on dip strategy should be applied here as well?
So since last 3-4 trading session, stock is witnessing some supply pressure. Stock slipped below to its 50-day moving average. Looking at the near-term structure, some supply pressure is likely to be there in the stock price. On the downside, the important support area which we are seeing, that is at around 525, 530 zone. So I think wait for some more corrective move in near-term basis. Around 525, 530 is again attractive level to re-enter in this stock. And if that levels holds, then yes, some possible pullback action we can see from those level. On the higher side, 600 is the immediate supply zone. If at all stock crosses above 600, then it may attempt to resume its again upward trajectory, and then possible we can see towards all-time high levels also in Sula. So buy on dips should be your strategy. Wait for some corrective move towards 530, 525. That's the attractive level to re-enter in the stock in this correction.
That's the view on Sula, but very quickly, I want to club two queries into one because they are both from the banking and financial services space. Ankit wants to know your thoughts on Bank of India, and Aishwarya wants to know your thoughts on Equitas Small Finance Bank. Both the counters were under pressure last week. Here on how the chart's looking.
So Bank of India, again, the same whole PSU basket has attracted some supply pressure or some profit taking, but overall structure for Bank of India is on the bullish side. Stock is almost trading near to its 20-day moving average. So if it holds above 135, 134 level on a closing basis, on a weekly closing basis, then yes, possible buying interest is likely to again, witness in this stock. And then on the higher side, 146 to 148 is the supply zone. If at all stock crosses those levels, then possible target we can see towards 160 to 170 also for Bank India. So stock managed to give breakout on the long-term chart. So I think post this corrective move, 133, 134, that level needs to watch for near-term perspective. I think my advice would be to hold this your position if you are invested for short to medium term perspective. Possible upside target we can see towards 170 also for this is small for this stock. The next stock, as you mentioned about Equitas Small Finance Bank. So this stock is also consolidating in last 3-4 week. Looking at the near term, short term structure, stock is holding its important support area of 100 level. That's the important level on the downside. If stocks holds this level, yes, again stock may resume to its uptrend, and possible target again we can see towards 125 to 130 on the higher side. So those who are already bought the stock can keep their stop loss at around 100 if you have bought for trading perspective, and hold the position on the breakout above 110. Possible target we can see towards 125 in short period of time.
Right, one last query then. This one's coming in from Nirmalya, and again on the banking space, Bandhan Bank, holding a huge quantity, he says. So what should he do? Of course, the stock was, stuck in a downtrend, but last week it did show some attempts at a recovery, right? Last 5 sessions, the stock has gained somewhere around 3%. Do you think this rebound is sustainable, and what should he really do?
So still structure is on the weaker side. Yes, some recovery is taking place from its previous swing low support area that was in March 2023. The almost same support area of 200 level acted as a good buying zone again in the stock. So for near term to short term perspective, one needs to closely watch this 200 198 zone. If stocks breaks below those level, then down move is likely to continue in the stock as some recovery is taking place. So in this recovery, we have to watch this stock towards the end of this Fab series, whether the short unwinding takes place or not. If stocks crosses about 215 to 20 zone, then yes, possible short covering action we can see in the stock, and then we can see towards 230 to 240 targets on a short term perspective. So as you have bought stock in decline, then you can hold with stop loss of 198. In this pullback, yes, possible target we can see towards 250 to 220. Again, review around those levels.
All right, that's the call on Bandhan Bank. Hope that answers your query. But with that, we've come to the end of the query segment. Rajesh, before I let you go, what would your stock recommendations be?
So Nandita, I think real estate space can do well, and DLF is our pick at this moment. Very strong buying action is taking place. Stock is almost trading near to its highest point for this series. Looking at the overall data setup, we expect that DLF can exhibit good amount of rally towards 930 to 940. Keep your stop loss at 978 to buy and accumulate this stock. Another stock is JSW Energy. Stock managed to give breakout of last 6 days consolidation range. Looking at the overall structure, we believe that JSW Energy can exhibit good amount of rally towards 530 to 540. One can buy this stock with stop loss of 498. And the third stock that we like at this moment, that is Bharat Electronics. Very strong buying action in last week, and looking at the breakout on the near term as well as on the short term. Overall, a long term structure is on the bullish side. Stock is comfortably now holding about 200 mark. So looking at the structure, we believe that one can buy this stock also for upside target of 215 to 220. Keep your stop loss at 200 level.
Right, DLF, JSW Energy and Bharat Electronics, 3 recommendations coming in from Rajesh. With that, Rajesh, thanks a lot for taking out time and joining in this morning. As usual, Monday mornings with Rajesh. And of course, we keep getting a lot of queries when people want to know what your recommendations are. So, of course, see you next Monday and thanks a lot for joining in.
Thank you.
But with that, we've come to the end of this edition of Morning Trade. Thanks a lot for tuning in from me and the entire team. But of course, stay tuned because coming up next is Open Well.